In the context of a still fragile recovery and with renewed downside risk, the ECB is ready to do more to support further the activity in the Eurozone. Hello and welcome to this new issue of Eco TV Week. Since the September monetary policy meeting, the ECB has adopted a very dovish communication, opening the door to further accommodation. The ECB staff projection has been revised down, with notably inflation now forecast at 1.1% in 2016. In addition, renewed downside risk has been identified, related notably to the slowdown in emerging markets and the tightening of financial and monetary conditions since April. Several times, the ECB has clearly indicated its readiness and ability to react if needed, notably by underlying the flexibility of the QE program in terms of size, duration and composition. So far, the economic indicator and surveys show Eurozone recovery resilience. Nevertheless, the challenging external environment could limit the Eurozone growth in the coming months. There could be at least two channels of contagion. The first channel is linked to the external trade. A slower growth in emerging markets will translate into a slower external demand addressed to the Eurozone, and this could penalize the Eurozone exports. The second channel is related to the business investment and hiring intention that could be postponed by the rising uncertainties regarding the outlook for demand. Export companies are the most exposed, but second-round effect could also impact the more domestically oriented firms. The ECB will watch very carefully the upcoming economic events in the Eurozone. Given the very accommodative stance taken in the recent weeks, one could think that the bar has been set quite low for further action. The simple fact that growth failed to accelerate by year-end could trigger further accommodation by the ECB. Indeed, beyond the low oil prices that weigh directly but temporarily on inflation, this is the extent of spare capacity and their slow reductions that constitute the main problems for price dynamics. In these current circumstances, achieving a higher rate of inflation implies achieving a higher rate of growth than we currently have. In December, the ECB will present its updated macroeconomic forecast. If, as we anticipate, the inflation outlook is revised down, the ECB could also announce an extension of the QE program as well as higher monthly purchases. As for next week's events, the focus will be in the Eurozone with the publication of the August industrial production data in Germany and France. That's all for this week. Thanks for your attention and see you next week for your 2 minutes of economy.
BNP Paribas, la banque d'un monde qui change.